All right, we in that thing like a chicken wing. You feel me? All right, cool. Let's see. Let's see. Yeah, don't look like we have anything on here, which is okay. All right, all good. Euro GBP might be dropping, but I didn't really see an entry on that for me. We do have a buy position that we could be looking at, but we'll talk about that as the opportunity gets closer. So nothing on the harmonic scanner. DeLorean, let's see if we got anything. DeLorean, to be honest, doesn't usually start calling out good stuff until usually after this call. So we usually don't get anything around this time, but I mean, technically the London session doesn't start until 2 a.m. Central my time. So market is still, kind of warming up. It's like an old car in the wintertime. You feel me? If any of y'all got an older car and you'd never had to wake up earlier just to be able to get that thing warm in the wintertime, you know exactly what I'm talking about. I'm talking about it's colder in the car than it is outside. Y'all know exactly what I'm talking about because I know what I'm talking about. Anyway, so we're going to go ahead and get it cracking, right, with the two trade ideas that you guys would have been holding from yesterday. And the topic I'm going to talk about today, we also have a current trade idea that we're waiting to see if that might possibly activate. Let me see if any of these other ones there. Nah, so I'm gonna go ahead and delete this. That's not gonna pull back. I was looking for Euro USD short, but as you guys see, this is already broken this low. And I definitely don't want to try to sell this because this imbalance is what I'm pretty much looking for it to react off of to continue higher. So if I couldn't catch the entry before it violated this low, it's way too risky to try to catch it if it comes back. So I'm gonna just go ahead and erase that markup. Go ahead and take that off this, take that off the hit list. Okay. What else? USD Chef. USD Chef, I definitely think it's going to be the trade. I mean, technically, we already got two of the trades of the week, but I think this is that this could possibly be the trade of the month. This looks like a really clean setup, but not quite ready yet. EuroCAD. Damn, I was actually looking forward to EuroCAD. EuroCAD doesn't look like it's going to give us the entry either. And this is similar. This is trading into a gigantic imbalance, which could be a continuation higher. So I honestly don't know if that's something I'd want to still take, to be real with you. I'll see how much deeper it goes, but as of right now, I'm kind of cool on that. I'm not gonna erase it. I'll just leave that there. Let me go back and look at Euro USD. Euro USD is gone. Was I looking at that on the 2 hour? Yeah, I just rather not take that chance. That's too risky to try to take it if it comes back. EuroCAD is a little risky too. Since it's just dropping, I thought we was maybe gonna get this retracement back up in here off of this 5 hour. But yeah, it doesn't look like that's gonna happen. So we're not gonna worry about that. I'm not gonna take it off the hit list, but I'm definitely not going to put too much focus into it. Let me scan the market real quick before we go ahead and get into it to maybe see. I took a little power nap before I got on this call. Let's see if there is anything that might have happened while I was away. Somebody said they're in Euro USD. Shout out to you. One thing I always tell people is the biggest thing I learned in trading, as long as you're confident in your setup, nobody else has to be. I'm gonna repeat that one more time. As long as you are confident in your setup, nobody else has to be. I learned that, I ain't gonna say the hard way, kind of the hard way. Because what you don't want to ever do, I'll give y'all some advice, right? Something that I had to get off. Do not let, this is old. This is not even like an actual markup. All right. Do not let somebody's opinion of your setup make you change your setup. So if you're looking for a sell and somebody that you highly respect is saying, well, I think it's going to buy. Who gives a damn what the hell they think, right? It doesn't matter if they make $1 million. It doesn't matter if they make $1 billion. That doesn't necessarily mean that in an isolated scenario, they're right and you're wrong. It doesn't work like that, right? They could be the greatest trader of all time in this isolated setup just because they think it's going to go up. It doesn't mean that it's going to go up. It might actually go down. And if you think it's going to go down, go with your gut. Like I said, I've had scenarios to where Literally, I say the same story every time. And I always wish that I remembered the day so I could go back and show it, but I don't remember the day. So sometime last year. I ain't gonna say the educators' names because I love them and I respect them, and I ain't gonna put them out there like that. But they did your boy a little dirty, but it definitely helped with my confidence. I remember one day I hopped on a session, I dropped a markup, and it was two educators on the call. They was doing like a tag team, right? Simultaneously, whenever one of the educators went to the chat and clicked on my link, they both bust out laughing. I still to this day don't understand the need for them to laugh. It's funny after the fact, but in the moment, I was like, damn, why they laughing like that? They just bust out laughing. It was like, yeah, I don't think it's gonna do that. And then they kind of just went on about that day. You want to know what ended up happening? My setup did exactly what I thought it was gonna do. And the next day, I got on one of the educators' calls because he was doing it by himself. I resent the chat. I resent back the markup in the chat. He looked at it. He was like, you know what? I was wrong. Shout out to you for taking that trade. And I say all that to say, right? I literally had two educators that I highly respect bust out laughing at a setup that I threw in the chat. But guess what? The setup ended up doing what I thought it was going to do. And what they thought it was going to do was wrong. What I thought it was going to do was right. So I say all that to say, it doesn't matter what the hell anybody has to say about your setup, right? It only matters what you think about it, how confident you feel about it. And at the end of the day, if you use proper risk management, it really doesn't matter what happens. If you win or lose, as long as you're not blowing your account on an individual trade, you'll be able to recover. Okay. So hopefully that's a learning lesson for y'all. Because one thing that will happen to y'all, you're going to have somebody that you highly respect, right? And they're going to be like, nah, I don't think it's going to do that. And then your brain is going to be like, damn, he says he doesn't think it's going to do that. Is it going to do that? Don't let that psych you out. Just go with your initial gut feeling. Trust me. I'll go ahead and tell you, Kyle. I done already said it before. I'm trying to act like I'm trying to hide it. It was Lex Waves and John Dollar. Them suckers both. I'll never forget it because Lex Waves has like a very distinctive laugh. They both bust out laughing. I'll never forget it. That shit was crazy. Yeah, they both bust out laughing. I felt kind of hurt a little bit. I was like, because it's like, why are y'all laughing? Like, is it necessary? Just say that, nah, I don't think it's going to. They both bust out laughing. And the next day, morning, I got on Lex Wave's call. I resent it, showing him that it was the same markup from the previous day, hoping that he would recognize it. Be like, you know what? I was wrong about that. It's like, I remember you sent this in the chat yesterday. It's like, you know what? Shout out to you for taking that trade. And at that point, I was like, you know what? God damn it. I don't have to listen to the people that I respect as far as changing my bias. If I think it's going to go up, God damn it, it's going to go up. You feel me? Yeah. But like I said, I mean, it is what it is. There's nothing against them. You feel me? Because think about it. Somebody's probably, one of your people's probably sent you a markup and you done looked at that joint and been like, yeah, bro, that shit's not going to do that. Right. So it is what it is, right? I might look at somebody's markup. I ain't gonna do it out loud, but in my head, it's like, yeah, it's not gonna do that, bro. And it ends up doing it. You're right. So yeah, I mean, that's a learning lesson. I literally will never forget that moment because I was like one of the most pivotal moments in my tradings where I was like, bro, I know what I'm doing, right? The educators literally said no. My brain was like, yes, and it ended up doing what I thought it was gonna do. So F what anybody else is talking about, bro. You think the bitch is gonna go up? That bitch is gonna go up. All right, enough about that sob story. Just wanted to throw it out there because I know a lot of people end up changing their minds based off of what somebody else has to say about their markup. Forget what anybody has to say about your markup, bro. Once you mark it up, only change your mind if it's up to you. If you let somebody else's opinion change a markup that you already have marked up, you're going to mess up your whole psychology because all it's going to take is one time for you to be like, man, I know I should have went with myself. And they just going to be mad based off of either, you know what I'm saying? I've taken a trade that I was going to pass up on just because the educator was like, I like this. And in my head, I'm like, damn, maybe I should like it too because he likes it. And I end up losing money. It's like, I shouldn't even taken that trade because before I didn't like that setup. But since somebody else said that they liked it, it made me end up liking it. You know what I'm saying? So all that shit can fuck up your psychology. So just go off yourself. But anyway, so let's go ahead and talk about these two setups. So I did briefly talk about NZD Chef yesterday. We'll go ahead and talk about it again. We'll talk about GBP NZD as well. And we'll pretty much cap it off with CHF JPY. Hopefully CHF JPY, you mother sucker. Hopefully you don't take off with me. If this candle closes like this, she might be gone. Okay, she might be gone. Hopefully she's not gone, but she might be. But all right, let's go ahead and talk about it. Oh, so the topic I want to talk about today is we're going to talk about Targets. How to find targets, okay? So one thing I don't usually talk about is how to be able to figure out take profits. I usually talk about entry, right? I usually stop loss is going to be the same thing every time, you know, we're trading off an engulfing / institutional candle. So stop loss is either going to go above the last high, below the last wick of that candle formation, and I always add 2 pips of spread. What I usually never talk about is how I identify TPs, okay? So we're going to talk about targets today. Now, before we get into that, let me go ahead and, you know, break down analysis-wise NZD Chef from top to bottom so you guys can see exactly why we took that setup and why I held it for so long. If you guys were on this call yesterday, think about this. This is how confident you have to be in your trading, okay? I want to break something down to you, all right? So this setup initially ran for 45 pips, okay? I'll break this down to you, and do not lie to yourself, okay? We've all been here. There's a difference between the people that make a lot of money or the people that hold their trades. The people that make some money are the people that manually exit their positions too early, right? The people that make a lot of money hold their trades. The people that make some money manually exit their positions too early. So if you notice, whenever this trade went 45 pips, it was a 4-to-1. Now I'm gonna be honest with you. I introduced a new rule today that I'm gonna talk to y'all about as far as like how I'm gonna go about doing my take profits moving forward. But basically in my head, I told myself I wasn't gonna take any type of partials until take profit got hit. So I want y'all to think about this psychology, right? The trade went up 45 pips, you're up a 4-to-1. That means if you risk $10, you're up 40. If you risk 100, you're up 400. If you risk 1,000, you're up 4,000. Now, most people would be like, I mean, it's not that much further to TP1. I'm gonna just go ahead and take partials right here. Cool, right? Now, think about if you did not take partials and you were following me, because I didn't take partials until I finally got up here. This market ended up pulling all the way back, right? Think about it. It came from up here, pulled all the way back down here. Now, I want y'all to think about how emotional you probably would have been, right? You went from a 4-to-1 to a 1-to-1. I'm gonna be honest with you. A lot of you guys would have manually exited the position for whatever reason. Keep in mind, we were already at break even. I had already announced we were at break even, I think, once we broke this high right here. This high right here off of this wick. But think about that, from a 4-to-1 to a 1-to-1. Why was I so confident to still hold the trade? Based off of what's called back testing. So the dope thing about it is the trade ended up reacting off of this. This was a gap candle from whenever the market opened, and then trended higher. Now, the old me, yes, if I would have seen from a 4-to-1 to a 1-to-1, my heart would have been racing. I would have been like, oh my God, why didn't I take partials? Why didn't I close? Why? You would have just been praying. And you probably would have got anxious and just closed out the position because in your head, you're like, man, I want to make something. I don't want this to pull all the way back to break even. Break even is only there so that you don't manually exit the position. I say this all the time. It defeats the whole purpose of setting break even if you're just going to decide when you're going to exit the trade. It's like, why even put it at break even? If you're going to decide when you're going to exit the trade, break even is pointless as hell. The purpose of break even is to let the trade either hit the break even or let the trade finish playing out. This is a prime example of an emotional trader probably would have manually exited this position, right? Think about this. In 2 hours, it went from a 4-to-1 to a 1-to-1. And then look how long it took to go back up. Choppy as hell. 17 hours. In 2 hours, you lost damn near the whole position, and it took more than half a day to get all of it back, right? The difference of the traders, right? He said, that was me, but I stopped myself. That's all you got to do, right? I'm going to tell y'all one thing. When you're taking Tyree trades, I'm not going to steer you wrong, right? I'm not going to do anything if I don't update it. So don't think I got out. Don't think I took partials. If I don't give you an update in the chat, I haven't done a damn thing. So we in a trade together. Don't be like, man, I wonder if Tyree took partials. If I didn't say I took partials, I'm still holding that bitch. You feel me? So anyways, let's go ahead and break this down real quick. Because y'all know John Dollery and Rock Kumar come on tonight. And I be getting my popcorn ready, right? I get on their calls and I learn something every single night. Those are the GOATs. I'm so glad that they started collaborating together. I think it's super dope. All right, cool. So first and foremost, I have 4 confirmations that I go over every single time I'm analyzing the chart. I want to be able to understand the overall trend in the market. I want to be able to determine my personal directional bias, which means what direction do I intend on taking the setup. I want to be able to see if there's any exhaustion in the market. And I want to be able to see if there's divergence. Excuse me. So pretty self-explanatory. This is obviously a downtrend. I don't really have to put too much effort into it. I don't really have to pull a trend line out or nothing like that. This is obviously a downtrend, okay? We got that sorted out. Now, my directional bias ended up being a buy, obviously. So let's go into why I was looking at a buy. Okay, so I want to actually erase this back to where the setup was, somewhere up in here. All right. So directional bias is going to be up, right? Why? Primarily because if you guys notice, right, the thing I want y'all to notice is whenever you have the market trending down, okay, the only time you look for a buying opportunity is if the market gives you some sort of break of structure throughout the trend down. You want to have some sort of retracement back into like this move, and then you want to take the continuation. All right. So that break of structure would have come right here. Technically, we got two breaks of structure. This is definitely the stronger one right here. Right. So we got an initial break of structure, right? Which is exactly how I showed you guys. The market is trending down. We really don't want to look to take it back up until we get one of these significant highs get broken. That's a telltale sign the market is showing you, hey, you know, I might start working my way back up. Okay. Now, from that initial break of structure, let's see if we can detect any exhaustion or momentum. Okay. And then, like I said, I'm going to teach you guys how to be able to identify targets. Okay. Now, the RSI, even though I tell you guys all the time, I just don't think I'm going to be using the TDI. I just feel like it just takes too much. I really just don't feel like explaining it. But just know I really don't use the RSI. I just use the RSI to teach y'all. I'm primarily using the TDI, but it's a lot going on the TDI. The RSI is just easier to explain. Anyway, so whenever I'm looking to determine exhaustion in the market, okay, the exhaustion in the market is usually going to come from the fact that we have the RSI dipping outside of our purple box. All right, the purple box is going to be like our momentum window. Whenever the market goes outside of the purple box, that means the momentum is getting weaker. Okay. So if it goes outside the purple box to the downside, that means that the selling momentum is getting weaker. If it goes out to the upside, that means that the buying momentum is getting weaker. So notice in both of these examples, right, we can see that the market is showing us that the selling momentum is getting weaker. But what happens? The market keeps dropping. This is why you never just randomly hop in for a buy whenever you see the white line come outside the purple box. That's dangerous, right? Now, the next sign of weakness happens over here. Okay. And I can see after the fact, the market does start showing signs of slowing up. Notice how the first sign of weakness is here, but the market still gave you this crazy aggressive drop, right? The market is clearly starting to go sideways at this point, right? Now, the next thing that we want to be able to focus on is after we can detect exhaustion, we want to be able to see if we can detect divergence. How? I usually like to take it from the candle chart to the line chart. Okay. Candle chart to the line chart is the easiest way to be able to see it. Divergence is very straightforward, but obviously, like anything else, you have to train your eyes to be able to see it. Okay. So you have the indicator, which is the RSI going up. Okay. Another YouTube video I plan on making, maybe not this week, but next week. And I'm gonna start teaching it to y'all next week. There's two other indicators I'm gonna show y'all how to be able to detect divergence on. The stochastic and the awesome oscillator. So the stochastic, shout out to Christopher Terry. He actually has specific settings on the stochastic, which from what I know from like Manny Quinones and Starboy, who I learned it from, he's pretty much the person that created those numbers. So that's the way that like Starboy, if you ever get on Starboy sessions and he pulls out the stochastic, that's what he's using. So Manny Quinones uses the awesome oscillator. Both of those are two additional indicators you can use to detect divergence. RSI is going to be the simplest one, but I want to be able to give y'all the options because y'all might like one of those other two better than the RSI. So I'm going to definitely teach y'all that as well. But I want you guys to notice, okay? Notice how I guess I could do it from up here. So notice how the market from here to here, right, on the chart is going down. I don't know why I can't get that perfect. Shaky ass hand. All right. So from here to here, the market is going down. From here to here, the market is going up. That's going to be divergence. Now, a lot of times I tell you guys, the way that I feel like the divergence is confirmed is some sort of impulsive move immediately following the divergence. And a lot of times you will get that break of structure in some way, shape, or form, okay? So you have the divergence, we got the break of structure, we got the exhaustion. Now the only thing we need to do is look for an entry. Now I tell you guys all the time, the way that I look for an entry is pretty straightforward. I want to be able to look for the biggest engulfing candle on the highest time frame, okay? So that actually ended up being found exclusively on a 2-hour time frame. Now we had the 2-hour, the 3-hour, the 4-hour, the 7-hour, the 8-hour. So a lot of different time frames had this engulfing / institutional candle, right? So it was a lot of different confirmations that we were actually able to use in order to be able to, you know, have enough confidence to actually take this setup. Now, the dope thing about this opportunity is going to be, this is one of our setups that we had a relatively small stop loss. Now, y'all know me, I'm a higher time frame trader. I used to get clapped on the lower time frame. So I had to get to the point where it's like, I'm gonna just stay away from the lower time frame unless it's a very specific example that I'll show you on GBP and ZD. So the reason why my stop losses are usually a little bit bigger is because I exclusively trade on a higher time frame. That's why I have so much success. That's why we get so many pips. That's also why we are swing trading. And a lot of these positions may take, you know, closer to a week, few days, things like that. Okay. So it's not often that we get setups to where we have like a 10, 11, 15 pip stop loss. I'm gonna just be honest. I don't necessarily care to have like the cutest, the smallest stop loss. I just want to have profitable trades. Okay. The biggest stop loss I feel comfortable using is 40 pips. And I'm okay with that. Right. But yeah, don't get it twisted. If I can get a 10, 13, 14, 15 pip stop loss, I would prefer that, but it's not just based off, it's not always going to happen like that. So this is actually a setup to where we were able to reduce our risk, which is why our risk to reward was so great on this setup. So what I do next is I'm going to show you guys how I get my entry. And then what I'm going to do is I'm going to show you guys an indicator real quick to show you guys how to be able to start finding. What am I thinking about? How to start finding take profits. Okay. So you guys should know by now, whenever I find my candle of emphasis, first thing I want to do is I want to find the 50% of that candle. Okay. It doesn't mean I'm going to answer off the 50%. I just want to know where it's at. All right. What's the next thing I'm going to do? Next thing I'm going to do is I'm then going to take I'm going to draw an entry zone. Okay. So the entry zone is going to be from the opening of the candle to the 50%. And this is basically where you would like to see the market pull back to. Okay. Now you can wait on a rejection and do it by market execution, or you can set a pending, which is what I'm about to do. So the way I get my exact level, and I'm going to take the fib one more time from the high to the low. Okay. And I'm going to go ahead and slap that on there. All right, cool. All right. Now, this data feed is a little bit different. The 88% was actually like down here on the other data feed, but for the purpose of this example, it's not really that big of a deal. So the concept of it is, what I usually like to be able to find is a fib level that lines up in my entry zone. So by default, right, I would basically use the 88.6 as my entry level. Okay. That's pretty much how I find my entry. I drop the fib level. I drop the zone. I want to be able to have a fib level in my zone. That's how I get my entry. What I want to have is an entry between the opening and the 50%. I don't want an entry past the 50% unless I'm trying to force an entry based off of my stop loss, which you guys will see on GBP and CD. So that's basically the setup. Okay. And as you guys see, we got a perfect reaction Okay. This little wick right here, I don't even think this was like a real wick, but it was like a manipulation wick of some sort. Yeah, see, because it didn't even happen on this data feed. So that was like a wick based off of that broker. Let me show you guys how to be able to look for targets. Okay. This is going to be some sauce. This is what I recommend moving forward. Y'all utilize this indicator to help y'all find targets, valid targets. Okay. It's going to help you swing your positions further because you're going to have more specific areas that you're targeting. Okay. I want y'all to pay attention really close. You're going to go to indicators. All right. You're going to type in MATRX matrix. Market Maker Matrix by Juicin V2.0. This is one of Tyrone and Patrick Kenny's students that created this indicator. Shout out to him because this is like one of the, I ain't gonna even say one of the, this indicator and the TDI is not even close. These are the best two indicators, point blank period. Oh, shout out to John Dollar, boy, sent out TP on GBP USD. Shout out to that boy. If y'all ain't plugging in the steady signals, y'all sleep. I tell people all the time, I don't care what kind of ego you got. You better open up a separate broker, right? And start taking steady trade ideas, right? Open up a separate broker and start taking steady trade ideas because steady be steadily hitting. No cap. All right, cool. So whenever y'all add that indicator, all right, I'm gonna just add it so I can show y'all how to customize it. I'm not gonna touch this one. This is the one that I already have customized. As y'all can see, it's like a lot more going on here. Yeah, I'm not gonna show y'all all that because that would take too fucking long. If anything, I'll make a YouTube video going into way more detail on everything else. But this is what I want y'all to do, okay? Remember, this video is gonna be recorded. Actually take a screenshot because I forgot. I told y'all I'm gonna start dropping the older videos first. So this video might not be uploaded to YouTube for like another week and a half or two type shit, to be honest. Because I still got videos from a week's worth that I haven't uploaded. This is what I want y'all to do. Let me all right, cool. So look, I'm going to, whenever you come to this indicator, let me first figure out where what I'm looking for is. Okay, the plot. So day, weekly. First two is day, second two is weekly for plot. Okay. All right, this is what I want y'all to do. Whenever y'all click on that indicator, okay? Remember, once again, it is the matrix, MATRX, okay? MATRX, no I in it, right? No Neo. MATRX, click on that. It's gonna pop up like this. It's gonna be a lot of different shit going on, okay? Click on the settings, go to style, unselect everything, literally. Unselect everything, okay? Unselect all this crap. All this. All this. Okay. Unselect all this. The only thing you should have left is plot, okay? I don't even necessarily know what all this crap is. Yeah, the only thing you should have left is plot. So once again, if you go to style, unselect everything except plot, right? This is what you're gonna do. The first two plots, you're gonna make these, you can honestly make them whatever color you want to. I'm just gonna tell you the colors I have. The color doesn't matter, keep in mind. I'm gonna make these first two blue, okay? You have to make sure the opacity is up because whenever you saw it change, the color didn't actually change. So make sure the opacity is all the way up. So I'm gonna change these first two to blue. So whatever color you decide with, these first two need to be the same color, okay? These first two need to be the same color, all right? These next two need to also be the same color. So I'm gonna make these orange. Obviously, you can make them as thick as you want to. It's totally up to you, okay? All right, cool. You can even change this. So if you want them to be lines, you know what I'm saying, for whatever reason. I prefer the like the little beaded circles. right? That's literally it. Drop a 1 in the chat if y'all are with me so far that y'all understand what I just did. You understand what I just did? Okay. All right, cool, cool, cool. So here's the significance, okay? If you go back to this, remember, you have to remember what you color coded. The first two, I want y'all to write this down. These first two plots, write this down. These first two plots represent previous daily highs and previous daily lows. I'm gonna repeat that one more time. These first two plots, whichever color you decide to make them, represent previous daily highs and previous daily lows, okay? Now, the second part is going to be previous weekly highs and previous weekly lows. So the first two are previous daily highs and lows. The second two are previous weekly highs and lows. Now you might be asking yourself, what does that even mean to me? I got you. If you look at all these lines on the chart, all these essentially are targets. Why do I say that? A lot of times when a market is building up liquidity, it is going to be previous daily highs and lows that the market is going to come back and take, okay? Let me give you an example, right? Notice right here, we have two, let me show you how to read these properly, okay? So you see how this beaded line is right here next to this high. This beaded line is right here next to this high. Both of these would be previous daily highs. These are two separate days. Now, notice how this high has this previous daily high, which is blue. It also has this previous weekly high, which is orange. That means that not only is this a previous daily high, this is also a previous weekly high. Drop a 2 in the chat if y'all are still with me, right? These two beaded lines next to these two wicks represent two previous daily highs. This orange line next to this wick represents a previous weekly high. Drop a 2 in the chat if y'all are still with me. All right. So that means that this high was set a previous week. That was also a day, but this day was probably the high of that week. So that's why you have both. So this one would be more significant than this one. Why? A weekly is obviously going to be more significant than a daily. So this high is going to be more significant than this one. Don't get confused by this, okay? Whenever you see the line running through the candles, that means that it's going to be from a previous. So like this week would be from over here. So what you want to do is you want to try to line these up. You want it to be off to the right. Anytime it's running through the candles, this is from something that happened like all the way over here, right? Notice this goes with this. You see how this orange is running through these candles? That means that this would have happened probably like right here. So anytime it's like running into the candles, that probably means it happened like further to the left. So you really want it to be off to the right, right? This low goes with this. This low goes with this. This high goes with this. This high goes with this. All right. So on and so forth. This high goes with this. Remember, you don't want it running through, because what that basically would indicate is, let me show you an example. You see this high right here? That would be represented from here. But whenever the market breaks past that area, that's why it looks like it's running through the candles. But this will still represent this previous daily high that the market went above. Drop a 3 in the chat if it's still making sense. Let me get y'all. I'm just trying to get different numbers so y'all aren't spamming with the same numbers. Let me get y'all to drop a 3 in the chat if this is still making sense. Okay. I'm literally showing y'all how to be able to determine significant structure. Every single high that you see may not actually be a previous daily or weekly high. It may just be a high from sometime in that day. So now look at my take profits. Okay. I practice what I preach. Look at my take profits. Okay. Look at how this take profit was a previous weekly high. Look at how strong of a reaction the market gave us with these two big wicks, right? The market is having a hard time closing above this area, right? Previous weekly high. What is my next take profit? Where I was showing you guys a combination of two previous daily highs and another weekly high. Where's my next take profit? This previous daily high, a little bit higher than that, because I know I like even numbers. Previous daily high. What is this? Another previous daily high. Okay. I don't necessarily know if it'll go all the way up here. That's why I'm not targeting up there. But this is what I'm telling you guys. So if you guys ever want to know how I'm setting my profits, take profits, I'm going to be honest. I usually just cheat based off of what I'm showing you. Okay. Yeah. Even without this, you can still identify, highs and lows. But you might not know how significant they are. Right. So that's NTD Chef. So we've basically broken down NTD Chef. Damn, I didn't realize I took so much time on this just one pair. It's cool though, because y'all learned a lot based off of this. So I'm gonna go ahead and go to GBP and ZD. So we're basically done with NTD Chef. Like I said, I mean, at this point, hopefully I move y'all's break even up. I did say move your break even. If you guys go check the chat to here. So let me update this. So this is my break even, which is about 10 pips in profit. So that's where I put my new break even. So we did take partials. Keep in mind, guys, this is a 4.6 to 1. And that's my first take profit. It's disgusting. It's literally disgusting. Okay. Disgusting. Right. Obviously, every single one of my take profits is not no goddamn damn near 5 to 1. But this one is. Now, this is going to be the rule I'm about to tell you guys I was going to do with my take profits, right? Because I'm be honest, I was a little nervous on this one. I was a little nervous, right? I'm human, right? So even if I'm trying to play it cool, I don't want to see no shit like this. But I just know that it's either going to hit break even or it's going to hit my take profit. I just know I'm not going to manually exit. But emotionally, I'm human. I'm still like, damn, why is it pulling back like that? But I'm still holding it, right? This is what I'm now going to start doing. And like I said, all of these things come from me back testing, me just taking so many trades that I'm able to start, formulating what I like to see and what works emotionally for me. What I'm going to start doing now is anytime I have a first take profit that's at least a 4 to 1 or more, I'm going to make sure that I have a take profit lower than that. So what I'm going to start doing, I don't even know if this makes sense. It makes sense the way that I'm thinking about it, but anytime I have a first take profit that's a 4 to 1 or higher as far as my first take profit, because like I said, I'm always looking to take out that previous high or previous low before the retracement. Now, obviously, some of those moves, I'll give y'all an example, like on CAD CHF, right? I previously had this marked up whenever I first started the call, but it would have been from like somewhere here, right? So no, it would have been from this over here, something over here, right? Taking this trade, that would have meant that my first take profit would have been at this low. Okay. Now, obviously, the market dropped, but it's pulling back pretty crazy. Maybe it doesn't come back down. So I want to be able to make sure I'm not just stuck holding something. Because think about it. This is a pretty crazy drop. Like, you know what I'm saying? To break that low, maybe it doesn't even break that low. Okay. So I started telling myself is anything that is more than a 3 to 1, I'll give y'all another example. USD Chef. USD Chef, right? My first TP, as you can see, which I'm going to update this. I'm going to just wait for this to actually get closer to activating. My first TP will be a 7 to 1. Now, I'm going to be honest with you. Since I've been thinking about it more, it's like that doesn't really make sense to convince myself before I even take any partials, I'm going to wait for it to go to a 7-1, because I might not make anything if I just hold it and it pulls all the way back. But it goes deep in profit. So anytime I have a first target, which I'm always looking to take out that previous lower high before I get the retracement, if it's more than a 4-1, I'm going to start making sure that my first target is a 3-1, roughly. Because the way that I look at it is, if I'm looking for it to go to a 7-1, I should automatically get that 3-1, but at least I would be giving myself a reason to take partials, assuming that this market doesn't completely give me this drop, but I at least still made money. Okay. So that's like something I recently just came across. Because like I said, I just don't want to be, Lex Waves talks about a lot. It's about making money. It's not about being right. So I don't want to get too caught up in being right. If the market puts me deep in profit, but it doesn't hit my take profit, I don't want to just be on some, oh, I ain't gonna take no partial. That's stupid at that point. So I was like, you know what? Let me figure out a way to where I can still take partials, but I'm not just randomly taking partials. So a 3-1 for a first take profit, nobody is going to be mad at that ever in life. So I was like, you know what? Instead of so where my first take profit is more than a 4-1, I'm gonna take partials sooner. But like how y'all saw in GBP and ZD, we got a little bit of time. Let me actually put this call on and see whenever they get ready to actually start talking. I'll kind of just drag it on a little bit longer. Give me 1 second. We're not going to hop off yet, because I still want to break down GBP and ZD real quick. I kind of did talk about that yesterday, so I'm just not going to take as much time. Like I said, I really wanted to focus on the targets. So hopefully y'all learned some value from me teaching y'all how to be able to identify targets. I'm going to take that one off, because definitely makes a big difference for me. Because like I said, as far as how you swing positions, like you should know, like if the market is going to go in that direction, it's going to take out those highs or lows from the previous day or previous week. It just makes sense. Let me see. They usually, you know, do a little bit of talking, stuff like that. All right, cool. They playing their music. All right, cool. So we probably got about like 5 to 10 minutes. Let's see. What else we got? All right, so hold on. Let me see if CHFJPY. Yeah, I hope it pulls back. It might, because it's technically, is that bearish engulfing? That's not it's technically a bearish engulfing, barely. We might still get this pullback, so we'll see. I'm not gonna obviously talk about this setup, because that would take too much time. We'll just go over GBP and ZD real quick. So like I said, I did call this out in the chat. If anything, if this actually activates, we'll just talk about this tomorrow. Let's go over GBP and ZD real quick. So I'm not going to fully break down GBP and ZD just because of time. It's not that big of a deal. I did technically break it down yesterday. So, you know, like anything, you know, I don't have to put supreme detail in every single setup, because that's what I upload everything to YouTube for. But kind of like, I'm gonna give you all the example like how I was talking about. So from back testing as well, I ended up finding out, like I told you guys, I know a lot of people like to be able to do lower time frames and things like that. Lower time frames don't work for me. Okay. It doesn't mean that you should stop doing it. If it works for you, it works for you. It doesn't work for me. Okay. I have enough trial and error, which is more so error than trial, to say lower time frames don't work for me. The only way that I'm ever going to use a lower time frame for an entry is based off of a manipulation wick. So if you guys see this, right, I've spoken on a couple times. This is a manipulation wick, right? Usually you can find these on higher time frames, 1 hour, 4 hour, things like that. Notice how that wick sticks out like a sore thumb. Since I've pointed it out, even from out here, you can still see it. Okay. On top of that, what you like to be able to see is that it took liquidity. So notice how this wick peaked above this high. There's nothing else relatively in this area to the left. So this was the last sweep before the market gave you, right, the close a lot lower. So the one thing I learned from Starboard, shout out to Starboard and Steady, is whenever you get a manipulation wick, you want to drop down time frames until you find more body than wick, right? drop down time frames until you find more body than wick. Now, every situation with a manipulation wick, you might not find a lot of body. You literally might go all the way down to the minute time frame, and it still might just be a lot of wick. I stay away from those. I only take the ones that I can actually find a big body candle. Okay. Now, this is going to be an example that I told you guys about that sometimes depends on if I'm trying to finesse my entry based off of the stop loss size. So notice on this, my entry was not only past my entry zone, it's not even in my entry zone, it's also deeper than the 50%, which is what I told you guys I usually don't like to do. So why did I actually do that on this situation? Let's explain. Okay, so in a nutshell, this is pretty much how we're going to end off the call. In a nutshell, same concept. So if I took the 50%, as y'all can see, if I were to take the fib, right, from the high to the low, which would have been like up in here, okay? If I would have taken a fib from the high to the low, you guys will see the 61.8 was the first initial fib level in my entry zone. If I were to take in my entry off the 61.8, my stop loss would have been 70 pips. Remember, my max stop loss is going to be 40. So I automatically knew there's no way in hell I could have taken my entry from here. Even though based off of how I entered, this would have been my optimal entry, I couldn't have taken it from there. So I'm going to move it up to the next fib level, right? Next fib level, still 51. Can't do it. So once again, I'm going to move it up to another fib level. 78. Perfect. Okay. Let me get y'all to drop a 1 in the chat if that made sense. All I literally did was move it up fib levels until I was able to get the stop loss of the size that I like, which is 40 pips. So that's how I finessed it. That's why I said every situation is usually going to be the same, but in some situations, you got to finesse it. Got to finesse it. You feel me? Got to finesse it. And as y'all see, finessing that entry ended up helping us out because we were able to get into the market, had a little bit deeper retracement than what we like, but y'all know me, if it doesn't hit the stop loss, I really don't care how deep it retraces. You feel me? The market ended up dropping, hitting our first target, which was actually a 3-to-1. So, like I said, this would have been valid because remember what I said, I'm only going to have another take profit before TP1 if my TP1 is 4-to-1 or bigger. This is still a 3-to-1. So this is valid. If my TP1 would have been like a 4-to-1, like this, I would have had to find another target first, just to ensure that we're taking partials. Because, like I said, a 4-to-1 for a first take profit is pretty significant, and I just feel like I'm being kind of stingy. And NZD Chef is kind of like one of those things that kind of brought me to that conclusion. It's like this trade went up a 4-to-1 and then pulled all the way back to a 1-to-1. I don't want to put myself in those kind of situations without taking partials, just being so stubborn to hold it to TP1. So this is a 4.5-to-1. Moving forward, I would have definitely taken partials somewhere closer to like a 3-to-1. So somewhere like this. Okay. But with that being said, like I said, I'm still learning, I'm still growing, but we're still making money as we're doing all that. So if y'all came to the call and y'all learned something, let me get y'all to drop some 5s in the chat. Y'all came to the call and learned something today. Let me get y'all to drop some 5s in the chat, man. Appreciate y'all, all my regulars for hopping on the call. Definitely doesn't go unnoticed. Got my boy Slick, got Christian, got my boy Butters, I see Eric, I see my boy Penitentiary Trader, I see my mama, I see my boy Skylar, see Trill, right? Appreciate all y'all for always hopping on my calls. It never goes unnoticed. And with that being said, I'm gonna see you guys at the top, not from the top, because the bottom is way too crowded. This video will be recorded and uploaded sometime, along the week. And look forward to whenever y'all go to sleep and wake up, I will have 2 YouTube videos get ready to be posted. So with that being said, I'll catch y'all tomorrow. Have a blessed one. Hopefully y'all are smart like me. Y'all are about to go hop on this call because that's exactly what I'm about to do. And don't do anything in the market tonight that I wouldn't do. Peace.